Capital FX signals. Trend continuation patterns. Bullish flag pattern. A bull flag is a bullish continuation pattern. It appears after a strong move upwards and consists of a flagpole as a strong move to the upside and a consolidation phase, which is known as the flag. Let's take a look at some examples. As you can see, there has been a strong uptrend, but as the markets begin adjusting to the higher prices, the price goes into a consolidation phase, and the price retraces lower in a narrow range. For it to be a real bull flag pattern, the two lines forming the flag will need to be parallel and will often slope downwards. There are two basic approaches to enter the market with this pattern. Aggressive traders will enter the market at the bottom of the pattern for maximum profits, while conservative traders wait until the price is broken out of the formation and only then enter the market. The price target of this formation would be the height of the flagpole measured up from the bottom of the flag. Summary: 1. Strong uptrend. 2. Price range in narrow consolidation phase. Don't forget to subscribe and leave any questions below in the comments section.